Well, thanks for joining us. I'm Marlon Bowling with you, and we're going to take a look at how the markets are responding after USDA came out with their morning weekly export sales numbers and a dose of overnight export activity. Now, just to recap, yesterday we sold some corn. It went to China, and it was 680,000 tons that went to China. And once again, I believe that was for new crop delivery. Yes, it was. So just wanted to point that out before we get into our look here at the actual markets. Now, on the corn right now, we're continuing to have pressure. Follow through selling from the losses that we had yesterday after the supply and demand report came out. And July corn is down 21 cents now at 6.93 3/4. That's within 4 cents of our low of the day. We're off our overnight high by 21 cents right now, or 20 cents. Now, in the December contract, we're dropping 17 cents at 5.76. In the soybean trade, and our quotes provided by bar chart, they show July down 32.5 now at 16.10 per bushel, off of our overnight high of 16.45 1/4. Now, November is down 30.5 cents at 14.13 1/4. Remember what the old limits were? Well, these days, the limit on soybeans is $1. So, we're not even close to halfway to a limit move. So these actually kind of pale in comparison to that now. On the wheat in Chicago, July down 7 3/4. We're at 7.22 per bushel. In Kansas City wheat, we have July dropping 15 3/4 cents now at 6.75 per bushel. And that's, that would be about 19 cents off our overnight high. Spring wheat trade in Minneapolis has July down 12 at 7.53 1/2. Ted Seifried joins us now from Zaner Ag Hedge in Chicago. Lots of selling, lots of red on the screen on the grain markets here today. Ted, did you expect to see that much follow through?
Yeah, I kind of did, Marlon. Unfortunately so. I mean, look, I've been saying for a little while that I think the corn had gotten a little bit ahead of itself, especially the strength that we've seen in December corn since the beginning of the calendar year. It had gained unprecedentedly against the November soybeans, which, I was kind of thinking, we don't need that. We need more bean acres. We don't need corn acres, really. And when you look at yesterday's USDA report, I mean, there's a lot to take away from it, but in particular, look at the new crop corn balance sheet at a 1.5 billion bushel carryover. Okay, it's a tighter number than what we've seen in the past 4 or 5 years, aside from this current old crop, but it's not an especially tight number. Now, some people will say, okay, the USDA cut exports 325 million bushels, but look at all the activity that we've seen from China in the last week, really 3.8 million metric tons sold. So that maybe that export number is going to be higher. Okay, but also what about acreage, right? I mean, I think we're going to gain about 2 million acres in corn, so that'll more than offset the extra business that we've seen from China, and it still leaves us with a 1.5 billion bushel or maybe higher carryover. And that's the realization that the trade is having right now. And it's taking some of that weather premium out of the market. And we've come down pretty good. Now, the surprise for me today is soybeans being down as much as they are. I don't really agree with that. We still have a very tight old crop situation, as reiterated by the USDA yesterday. And we're going to have a really very tight new crop situation unless we have an absolutely perfect growing season, or we get some sort of demand destruction event happening between now and harvest. So I think for me, this is the soybeans kind of playing catch up with what we saw in corn yesterday, and export sales didn't really help anything here today, aside from the announcement to China on new crop corn. But at some point, I feel like soybeans are an interesting buy here. But for today, this is follow through to the downside, mainly because of the realization of, hey, the new crop corn situation might not be as bad as what we had been making it out to be over the course of the last few weeks.
Okay, we'll take a look at our livestock trade as well here, Ted, when we come back in just a moment. Our guest is Ted Seifried. Don't go anywhere. We'll talk beef and pork next. Let's go back to our talk with Ted Seifried of Zaner Ag Hedge. And Ted, we had beef and pork export sales this morning, and both seem to be a disappointment, maybe more so on the pork side at only 14,700. Yeah. What did you think?
Yeah, they're both really quite disappointing numbers. Lowest numbers we've seen in a little bit. So you don't love that. And live cattle today, with corn being down as much as it is, it's nice to see feeder cattle higher, but you wish they would support live cattle a little bit more. It's not because of those exports. And so, yeah, live cattle under a little bit of pressure here today. I'm curious to see where we end the day up, though. I mean, if we're able to continue to pressure corn or keep corn down where it is, I would expect the feeder cattle to find a little bit more strength, even though we've had a nice bounce off of lows and we're running into technical resistance. You do see the damage done on the chart on the corn chart, and that's a big relief for the feeder cattle guys. So I don't know. I'm wondering if live cattle will turn around by the end of the day, but at least for the moment, not looking great. Here's the thing, though. Again, we've had a nice bounce off of lows, and technically speaking, we need a little bit of a correction. So this is fine. It's not doing any major chart damage as of yet. We did not have reversal lowers. We didn't get over yesterday's highs. So this is just sort of kind of a normal market action to this point. But we don't really want to see cattle get too much heavier here today, or that starts to change the chart a little bit.
That's true. Okay, now let's take a look at the live cattle board here right now and our quotes provided by Bar Chart. Currently, we have that June contract dropping by $1.97. We're at 116.62 per hundredweight. Only one tick off of our low of the day. August down 175 at 120.57. That's only 2 ticks off of its low of the day. And Ted and I were just talking during the break that the live cattle are sitting right on the 20-day moving average right now. That could be kind of critical support. Now, looking at the feeder cattle market here, you have the August contract 62 cents higher at 151.15. Well, that sounds strong, but look where we had the high today, 153.95. That means we're off of our earlier high this morning by $2.80 already. So we gave back a lot of ground, and now we're only 62 higher. And on the lean hog market, you currently have the June contract now down $1.20. We're at 110.82, 30 cents from our low of the day, and we are off of our earlier high by about 70 cents or so right now. So a lot of pressure in that hog market. We have everything from June on out over $1 lower. Ted, great information as always. Thank you for joining us. Appreciate it, sir. Ted Seifried of Zaner Ag Hedge with us this morning. Lots to watch. John, we'll keep up with you.